Hello everybody, this is Dan Kerr, owner and CEO of Heritage Financial Planning, and today I wanted to take a look at how the stock market performs during a presidential election year and what that might mean for you and your investment strategy in 2024. So let's look at some historical trends in election year. So the stock market's performance during a presidential election year has always intrigued investors, and historically these years are marked by increased volatility due to uncertainties around policy changes. Factors like fiscal and monetary policies, trade relations, and regulatory frameworks all play a role in some of those outcomes. So in 2024, the S&P 500 and NASDAQ have hit multiple record highs, making it a perfect time to examine some of these trends. Now, typically the market behaves obviously differently in election years compared to non-election years. So some of the factors that influence that are, one significant factor is what's called the incumbent advantage. Now, typically the markets tend to perform better when an incumbent party wins due to policy continuity, but that's not always the case. And maybe we're experiencing that right now. But regardless of the outcome, there's usually a post-election rally as uncertainties begin to fade out. Now, historically, the S&P 500 has averaged about 7% gain during election years since 1952, slightly below typical 10% annual returns. Now, for 2024, historical trends suggest positive news as the S&P 500 has not declined during a presidential re-election year since 1952. So let's look at 5 suggestions that investors may want to consider in an election year. Number 1, focus on long-term goals. Avoid making impulsive decisions based on short-term political events. The markets tend to recover from election-induced volatility. Number 2, diversify. Spread your investments across different asset classes and sectors to help mitigate a lot of those risks. Number 3, avoid timing the market. Trying to time the market based on election outcomes is extremely risky. So the best plan is to stick to your strategy and adjust based on economic fundamentals. Number 4, monitor economic fundamentals. Keep an eye on corporate earnings and interest rates and global economic conditions. Okay? These are some forerunners and indicators on what could be happening out there. 5, stay informed but rational. Stay up to date or updated on political development, but make decisions based on analysis, not emotions. Okay? So with the S&P 500 and the NASDAQ hitting record highs, focus on your long-term goals, and again, usually stay the course, okay? Now, we'd love to get together with you. If you're interested in setting up a meeting with us, we'd love to run our HFP Star Strategy analysis for you. We do a little deep dive into income planning. To me, income and retirement is everything, right? If you're taken care of and you're comfortable with an income that you will never run out of in retirement, it doesn't get any better than that. And then we look at age-appropriate investment strategies. When a lot of people come into our office, we find out that they're usually upside down in this area. And what I mean by that is they usually want to be a little bit more conservative with their investments, but their investment advisor has them currently a little bit too risky. And that's not age-appropriate. So we definitely want to take a look at that. And of course, we look at tax strategies, healthcare, and legacy planning, all in this HFP Star Strategy analysis, okay? We'd love to run that for you. Sit down with you, go over it. There's no cost to meet with us whatsoever, okay? So hopefully we can see you here in the near future. Again, this is Dan Kerr with Heritage Financial Planning, and we want to help you build a brighter financial future. So we look forward to maybe hearing from you real soon. God bless, and hey, thanks for watching.